Is this a market reset, a sell-off, or a market crash that we're kind of getting near, or neither?
I think
or none of the above.
I think it's correction. So I don't know if one of those was part of that. But I think it's a healthy correction. You get them every 1 to 2 years. Sometimes we forget that. And we just got off of a period of no data. Valuations had gotten really high. And there is a legitimate question around how much companies are spending versus how much they're making in terms of cash flow, and in the largest companies. So that's going to affect the broader market.
So you're talking about big tech and AI.
I'm talking about big tech and AI, and obviously Amazon's borrowing, outsizing it to $15 billion doesn't necessarily help that narrative. So I think you just need to start seeing proof that there's a return on invested capital. There are other things that are working, though, in the market.
We'll get to some of the things that are working, but I want to know what the proof would look like in your view. What do you need to see from some of these companies to show, okay, the money that we're spending is actually paying off?
I think you need to start seeing money from the actual investments that they're making in terms of like AI investments, how it actually reaches the consumer, how it reaches enterprise. Like we know in the private area, Anthropic is doing a little bit more revenue, right? Because they're enterprise focused versus like an open AI that's more consumer focused. So I think if people are investing money in places that are going to prove out that revenue comes, I think the other thing is that the change in the one big beautiful bill, right, gave that 100% expensing. And that's kind of something that I'm looking forward to in the future as well, which is like, that's not just AI investing, but also in other tech and infrastructure. And like that can start to lift the market too.
One of the things I wanted to ask you about, you shared some notes with our producer, Ariel Agami, and you said, or you noted, global markets have fundamentally changed. Individual investors are now a core part of the financial ecosystem, reshaping how capital markets function. What was once the domain of institutions is now open and accessible to millions of individuals worldwide. I understand where you're coming from, but I was thinking about what Dr. Adam Posen, president of the Peterson Institute for International Economics, said coming off of the meeting between President Trump and Mohammed bin Salman of Saudi Arabia, that this idea that capital flows actually are being controlled to some extent by moves out of the White House, whether it's taking stakes in companies, or it's the AI spend that is controlling so much, or it's what some say is a transactional White House where invest here and you get this. It's very different in some regard in a lot of ways from what we've had in the past.
I've personally never watched so many political shows in my career of over 20 years. Like that is part of what you have to know as an investor.
But it makes me question, like, do individual investors really still have a lot to say here?
I think they do, but not necessarily in the biggest companies. Like I think they actually are seeing, some of the individual investors I think are seeing things before the institutional investors, and that many are so aligned with the White House and what they're doing that they're like, this is what I think the future is. I also think that it's not necessarily showing up in the largest companies. There are other companies, smaller ones, that they kind of gather together and sort of community invest. And those aren't the biggest companies, but they are ones that are more volatile, but they have a longer time horizon. Most of the people on our platform are average age of 35. More than 2/3 of our company is millennials and Gen Z. So that's what, I think it's the same thing as being on a trading desk and kind of talking about investment ideas together. Now they're in X doing the same thing.
And Steph, they're probably watching crypto closely too. Yes. Bitcoin down 25 to 30%, depending on when you look at it, from those all-time highs just last month.
Yeah.
What does that do? Not for your customer and not for the Robinhood user, but what does that do for sentiment, or does it give any indication of sentiment?
I think it does, because you have seen actually some really big institutions sell some large positions too recently, not just in Bitcoin, but obviously in NVIDIA and other names. I think, but then there was buyers too from Berkshire Hathaway. I think those that play in the crypto space are very used to large swings. And I think there's kind of a meme out there that says if you're like when stock investors have a big drag down, they're like, the crypto investors are like, welcome to the way it feels. So I actually think they're kind of used to it. We haven't really seen a huge shift. If anything, most of our customers, when they're investing, they play the volatility in that when it goes up a lot, they'll trim their positions. When it goes down a lot, they do add.